In Q4 FY21, CV Major Ashok Leyland posted stellar set of numbers. After 4 consecutive quarters of decline, this time the company reported profits of 241 crores. The revenues were up 82% on the YOY basis, while the EBITDA showed a jump of 3 times from its levels in the past year, and also the margins of the company improved from 4.8% last year to 7.6% this time. Not only the numbers were great, but the management commentary post these numbers were also very encouraging. The company aspires to be among the top 10 in the global CV manufacturers, and that's the big statement coming in from the company, while the management joins ET now to tell more on how the company is planning its future strategies in terms of the new launches planned, how the company plans to sustain its margins levels, how they foresee the growth in their overseas markets. We were joined by the CFO of the company, Gopal Mahadevan, and let me help you with the key takeaways of this conversation. Starting with how the company is witnessing the demand recovery in the domestic market, the management is of the view that this time their market share has really increased in the Q4 FY21, with their MHCV share in the total volumes improved from 50% in Q3 FY21 to 60% in Q4 FY21. And going forward for the outlook for FY22, they are of the view that the growth in the current year will depend on how the opening of the lockdown takes place, not only in the domestic market but in the international market as well, as the demand will recover as the lockdown restrictions eases. The company plans further investment in their exports market, and the focus on the exports will continue to launch new products there, and the company will also work on increasing the distribution levels as well. Overall, to maintain their financial health, the company is of the viewpoint that they will continue to focus on their cost and working capital management. Now coming to their segment-specific growth, how the company is looking forward to the growth in their MHCV and the LCV segment. So company informs that though the MHCV segment is very important for the company, with almost like 65% of the total contribution from this segment, but going forward their LCV segment will become an important portfolio for the company, and they are expecting the LCV segment margins to improve as well. So all in all, 3 focus areas for the company right now. Firstly is to improve their market penetration, secondly is to launch new products, and thirdly is to grow non-MHCV business as well. On the new product pipeline, the new launches expected from the company is of the view that in the domestic market they have already launched new products, so they will try and launch new variants of their existing products, and the international markets they will continue to expand their product pipeline. Now talking about margins, we know that the commodity price inflation has been hitting the margins of the automobile companies. So for Ashok Leyland, the company expects the steel prices to cool off in the second half of the current financial year. But in case that doesn't happen, then the company will really try and continue to take the price hike like they have been doing and taking in the Q3 and Q4 of FY21, just to mitigate the commodity price inflation and not impacting their margins. Now, one factor that the analysts were keenly watching for was the CAPEX plan for FY22. Company informs that FY22 is expected CAPEX is at 750 crores with no plans for any major one, and the CAPEX will be majorly in the debottlenecking of certain facilities. Now commenting on the technological shift which will drive the future growth for the company. Firstly, their take on the digital initiatives. The company hopes that the digital is one of their key focus areas, and digital will help in building their productivity and also enhancing their customer base. COVID has advanced the digital initiatives taken by the company, so that is one of their focus area. And another focus area, another transformation that the industry is witnessing is the EV transformation. So in the case of Ashok Leyland, the company informs that they have already made up a subsidiary that we all are aware of, is the name of Switch, that under which the Ashok Leyland is undertaking all of its EV initiatives, and going forward Switch will have Indian facilities to help their the global and domestic demand. India is going to be one of the key markets in the EV transformation, but the growth outlook is very long term because the company expects that the EV transformation or the EV segment will form a significant portion of the transformation after 2030. That's around a decade from now. So that was Ashok Leyland performance snapshot in Q4 FY21 and future strategies overview. We will keep an eye on all the future developments as well. Stay tuned.